Introduction about Capital Market Malaysia. As a part of developmental mandate, the Security Commissioner Malaysia SC set up the Capital Market Promotion Council CMPC in 2012 to strengthen its internationalism agenda for Malaysian capital market. In 2014, the SC rebrand CMPC as Capital Market Malaysia or CMM to spread both to the local and international positioning and profiling of Malaysian capital market with the wide range of conventional and Islamic products, supported by a strong governance infrastructure. Capital Market Malaysia or CMM profile the competitiveness and attractiveness of the various segments of the capital market via comprehensive and integrated approach to increase international participant and enhance opportunity for Malaysian capital market intermediaries. CMM engage with a wide range of international and domestic stakeholders of the capital market. Our diverse network enables us to connect local capital market intermediaries to foreign stakeholders and provide a global platform to position Malaysian unique capital market offering and expertise. As an affiliate of the SC, CMM also continuously engage with the capital market regulator, providing market insight, business development, and stakeholder engagement support the market development initiative. The equity market has contributed to the development of private sector, with initial public offering, IPO, and issuance of new sharing enabling many companies to obtain a cheap financing. Equity investment made by individual, institutional, and foreign investors increased substantially, and market infrastructure was also developed accordingly. And to know more further about Malaysian capital market, I pass on to Hazwan.
Assalamualaikum warahmatullahi wabarakatuh. Thank you, Mr. Adam, for the introduction of the capital market in Malaysia. I am Hazwan. I will present a little bit of overview of the capital market in Malaysia. Short, simple, and straightforward, so that you could understand easier of the capital market in Malaysia. Malaysia, a dynamic and leading economy in ASEAN, with steady growth, young demographic, and a thriving capital market. A leader in conventional and Islamic products. The Malaysian capital market offers a diversity across all asset classes and industries. It is an international marketplace with a global benchmark and responsive regulatory framework. Home to ASEAN's largest market and the world's biggest sukuk center. The market has adapted to provide long-term financing across different maturity and infrastructures. Innovation continues to drive the market positioning in new, improved, and growth areas. The Malaysian capital market is summarized into 3 words: connected, vibrant, and innovative.
How about the factors that affecting the development of Islamic capital market in Malaysia? The key success of Islamic capital market in Malaysia is well influenced by the government of Malaysia itself. Malaysian government has been launched the Capital Market Master Plan in 2001 with 6 broad objectives, 24 strategic initiatives, and 152 recommendations. Basically, Islamic capital market in Malaysia has been through 3 stages of development, which are from period of discovery to period of acceptance to the period of strategic development. The regulatory bodies play a vital role in development of the Islamic capital market in Malaysia as they successfully develop Sharia governance framework. 2 main regulatory bodies in charge for the development are Sharia Advisory Council (SAC) and the Malaysia International Islamic Finance Centre (MIFC). Malaysia also offers a wide range of innovative Islamic investment products in the market as to ensure participations from a local or a foreign market players. It offers a holistic range of innovative Islamic capital market products, from equities to the debt securities across all our sectors and industries are being offered by Bursa Malaysia.
Another factor that is affecting the development of Islamic capital market in Malaysia is due to the 1917 Asian financial crisis. Due to this crisis, Malaysia government has focused on the development of Islamic capital market, especially on the product innovations, infrastructure facilities, product incentives, human capital development, and also financial market regulations. The reason is because Malaysia wants to enforce and strengthen the foundations of Islamic banking industry to face a new global financial challenges. With the current developments in the financial global scenario, further efforts have been done by Malaysia. For example, Malaysia has implemented a financial safety net framework for Islamic banking industry composed of a lender of last resort and deposit insurance systems. This is a part of Malaysia's continuous efforts to ensure healthy growth and to move the industry towards a greater heights. Last but not least, one factor that affecting the development of Islamic capital market in Malaysia is due to the efforts of multilateral institutions such as IFSB, which is Islamic Financial Services Board. Why IFSB has been established? Because with the rapid in the development of Islamic capital markets, it was perceived that there was a lack of integrated supervision and regulation of unique risks associated with Islamic financial products, and there was a need to develop a standard to address these risks. This is the reason why IFSB has been established, and it was based in Kuala Lumpur, and it was established since November 2002. The role of IFSB is, first, it is served as an association of central bank, money authorities, and other institutions. These institutions is responsible for regulations of supervision of Islamic capital markets. Another role of IFSB is expected to play a significant role in developing international prudential and supervisory standards and best practices for Islamic financial institutions. And also, IFSB intends to liaise and cooperate with other standard-setting bodies in the areas of monetary and also financial stability, and thus it will promote a good practices in risk management in the industry through research, training, and also technical assistance. The IFSB has started to develop two prudential standards for Islamic financial services industry, namely capital adequacy and also risk management standards. For example, for the future development of Islamic capital market in Malaysia, IFSB is planning to develop a standards corporate on governance and also transparency and market disciplines.
Since its inception in 1994, Malaysia Islamic capital market had been steadily grow and show great prospectivity towards both foreign and domestic investors. Malaysia capital market had been dominated by Islamic securities since few years back, with value of 2 trillion ringgit Malaysia, equivalent to 66% of Malaysia's total capital market size. Islamic security had also been actively chosen by investors based on its 1.9 billion ringgit Malaysia average daily trading value. These statistics and numbers implies that the investor had a great confidence toward the potential of Islamic capital market in Malaysia. In fact, the recent COVID-19 pandemic did not show any significant impact towards Islamic capital market month-over-month growth in Malaysia, where it's still recording 5% growth in May 2020. This shows that the investors still believe that the Islamic capital market can thrive during a global adverse event. Besides that, the diverse option of security type offered by Islamic capital market in Malaysia will give the opportunity for investors seeking to diverse their portfolio. To date, there are 746 Sharia compliant stocks from 12 different sectors such as industrial product, consumer product and technology sectors available to be traded and invested. Furthermore, the emerging trend of responsible and sustainable investment (SRI) had intrigued investors' interest from all over the world. As Sharia principles embedded in Islamic capital market are aligned with SRI concept, together with Malaysia Security Commission aspiration to develop Malaysia in becoming a regional SRI center, we will see a huge interest in investor towards Malaysia investment landscape and specifically in Islamic capital market. Lastly, the development and integration of technology advancement in Islamic capital market in Malaysia will give benefits to its future growth. The introduction of peer-to-peer financing, equity crowdfunding and also robo-advisory platforms such as Wahid Invest will give a great impression towards Malaysia as a huge capital opportunities for investors in the future. As Malaysia is the world's largest sukuk issuer, my team members Ain will continue to discuss the topic after this. Hand over to you, Ain.
But now the instrument has been one of the significant discussions, including in the world's leading conventional financial system. Islamic finance in Malaysia have been synonymous with banking. The advent of sukuk brought Islamic finance firmly into the realm of capital market, enabling users to more effectively manage balance sheet risk, diversify investment, lower the cost of funding, and maintain capital adequacy through financial practice that comply with Sharia. Indeed, if we think of innovation generally as the successful introduction of something new and useful, then perhaps the most important innovation in Islamic that we have seen recently is undoubtedly sukuk itself. In sukuk, we have something that provides the flexibility of cash flow, financing structure with participants offered through equity, strengthen the link between investment and real estate, and address the ethical consideration underscored by Sharia. But what has become apparent in the financial innovation, including that which relates to Sharia-based finance, is now facing a series of challenges arising largely from the credit crunch and financial climate we have found ourselves in. Risk aversion, although down from level experienced at the height of the crisis, remains significantly higher than in the past. Unsurprisingly, this has reduced the appetite for the more innovation form of finance. On the supply side, product development has taken a back seat while and other financial institutions continue to focus on asset quality. Lastly, products themselves are undergoing much heavier scrutiny. In the Islamic finance space, it is not just the more exotic varieties of instruments that are being researched. Scholars have been casting a fresh eye on more common structure for complying with Sharia principles. Regulatory change over conventional instruments could also impact on Islamic market. Moving forward, Malaysia will continue its determination to further strengthen the sukuk momentum via cross-border linkage, cooperation and collaborative partnership in order to contribute more to overall financial industry and economic development. Better cooperation, governance, legal and regulatory will definitely expedite the issuance of sukuk instruments.